I hope it's a good one, wherever you may be in God's green garden on this Monday, the 6th of February 2023. Not too many people in the room at the moment, but those who are here, thanks for joining us. As always, let's get stuck in, shall we, and see what's up first with gold and our London Open trade. Mind you, if you had been trading it on Thursday and Friday, you would have had a very, very nice result. You would have had nice results if you'd been trading it by the rules, and that is get out at first resistance or support, in this case support. But had you fudged, that's the word I'm looking for, had you fudged the rules and left them open, as I did, I've got to say, I had a very, very good result on gold. But I got out here. And had I left it open, wow, would have doubled my money. Anyway, small fish are sweet. Medium fish are pretty good too. Big fish are bloody good. Don't come along that often, and news events like we saw on Friday are not that frequent. Interesting scenario surrounding the NFP. G'day, Paul P. Surrounding the NFP or NFEC, whatever it's called these days. On Friday, I had a trade set on dollar yen long and cancelled it half hour before the news. Away she went. Could have had a really good week last week. Anyway, FOMO versus FOLO, that's the question. And I might do an education piece on that. Righto, we have, a couple of minutes to go, 3 minutes to go. We've got a range on gold. Those of you who haven't been in before, maybe on Facebook, not Facebook, on YouTube. Hang on, I'll just catch up with that. If you haven't been in before, then what we're attempting to do here is get the breakout of, it's interesting, the breakout of a session. There we go. On gold, we tried many, many times to get it right on pound versus the dollar, but the results weren't good enough to produce that as a system. Gold, however, is proving far better, and I think Peter the pointer, what's he do? Programmer for that. He's been trading the gold breakout similar to what we've been doing on the pound, and he's had far better results than we have. So if Thursday and Friday are any indication, then we're doing okay. Right, for today, our high is hang on, I'll just check the high. It's that bar there, I think. Yep. 1878. We'll go 1879 with that. And the low is the 0200 bar, which is that one, is 1863. So 1863 and 1879. Those are our breakout areas. I don't like either, I must say. If I were to say, okay, I'm going long here into the daily pivot untested, I'd say, no, I'm not. I'm going short here into a double bottom, I'd say, no, I'm not. But that's not what we're doing. We're following a breakout system. So we'll do as it says. We will go long here and we'll go short here. Obviously, if the long triggers will cancel the short, the short triggers will cancel the long. So OCO. All right, I better get ready for the long here in case it just leaps. Okay, I made a mistake the other day and went in at 3/4 of a lot. Oh, my goodness. It was a good mistake at the end of the day, but frightening. 0.3. This is test material, guys. So, again, if you're here for the first time, little to no risk on this, please, because it's still in test mode. 1879 is where we want to get in long. 1879.00. Our stop loss will be 18, can't remember, 63. Yes, it was 1863. And I worry about take profit. To buy stop, we'll place that one. Okay, so that's in. There's our stop underneath here. Can't see our entry. I'll get rid of that line. Come on. Still can't see our entry. You can see it over here, but it's right there. And we'll do the reverse for the sell. So new order, 0.03 is good. And pending order, it's a sell stop at 1863.00, and the stop loss will be 1879. Okay. Righto. Sorted. So again, if we break to the high side, and I'll just admit a couple of people. If we break to the high side, we will cancel the short. If we break to the low side, we will cancel the long. Targets. Okay, pretty clear to me today. The target is the weekly pivot is if we go long. If we go short, now it's a far different kettle of fish. I'd have to go DS1. All right, so that will be target DS1 and a weekly pivot. That will be no halfway entry. No Harry Gary. These days, we're just trading the clear breakout on gold rather than the halfway on pound. Okay. So it's just a breakout, either high or low. Don't care which, but if one cracks, then you cancel the other. And hopefully, as I said, you got in on Thursday and you got in again on Friday. Crackers, absolute crackers. Righto, so that is the gold trade for the Open of London session. We will now turn our attention to what I'm looking at for the week. I'm not going to go through the weekly game changes. I'm going to point out one, which is not a game changer, but I'll tell you this order first. I've got an order long Aussie yen, and this is based on a couple of things. You hear me talk about the three musketeers, the three amigos, quite often. And when I see the three amigos here, here, and here, they suggest to me that the range from which they are emerging but failing to emerge, right? That range there. So false break, false break, false break leads to a breakout on the opposite side of the range. Tick. However, if it comes back into the range, then that criteria has been met and we're talking about something else. Something else is going on. So when I think something else is going on, then I think we're going this way again, maybe only to the top of the range. But that's what I see. So that's the big picture on Aussie yen. The other thing to note is that we do have a classic scenario for me, which is break of a trade line, consolidation underneath, re-entry above. So you could say the same about the range, right? Same about the horizontal level. And then we've had a clear retest of that trade line. So that immediately says to me, if price goes back to here, it's going to here and maybe to here. So I want to be a part of that. So I put my entry above that bar, put my stop loss below. We're protected by the monthly pivot, the weekly pivot, the daily pivot, and the trade line. So the stop's in a pretty decent place. And if we do get to here, then, as I say, I think we'll get something to bank. First take profit, I've put conservatively below the 94 level, and I think that's the right thing to do. So The entry, if you want to follow this one, is 92.69. The stop loss is 234 pips below that. This is a weekly chart, don't forget. It's not a 30-minute chart. And roughly half of that risk I'm taking at first profit. I'm going to close half of the position and move my stop loss to entry, ensuring that we will bank some money if that does greet the judge. I'm going to say good day to Ash because I think he looks like he wants to say something, but otherwise I'll continue. G'day, buddy. How you doing?
Yeah, good, buddy. Yeah, not too bad at all. No, not really too much to say. I mean, I've got a little market review, really, more than anything else, or preview, I should say, really, for the week. But there's nothing I can see that is tradable as yet. There's maybe a possibility of a little bit of a downside push on the FTSE, but risk reward doesn't look too attractive. So okay, I don't think there'll be anything yet.
I'll push on for a bit.
Yeah.
Okay. Too easy.
You do that, buddy. Yeah.
My other, well, it's still on the watch list, I'll put it that way, is CAD Swiss. Gold's been triggered already. Okay, it must be the long. All right, so we need to cancel the short, guys. Yes, has been triggered. So I've got to get rid of that. The only way I can do that, cancel, modify, close, can't do that. I hate it. I hate it when that happens. I'm going to go. Oh, I'll do it in a minute. I'll be here for ages. EuroCAD. EuroCAD is looking very, very nice for a short here. Now, if you take into consideration the horizontal level, you can see that has been support in the past. That's the weekly chart I'm looking at. You can't really see that level on this chart. Hang on a second. I'll put that line on. I don't know why I've got it up there, but there you go. There's the level I'm talking about. Let me get rid of that. Let me get rid of that. And then go to the monthly chart. So you can see that this level has got history. Okay, it's messy support there. It's definitely support there, definitely support there. Messy resistance, clear resistance through here. And there's been resistance, back in 2000. Okay, we're going back a fair way. But you can see that the market respects this level, which is 1.4600 roughly. And for that reason, you probably would be expecting a little bit of a bounce here. I'm not convinced, however, that is the case right this minute. And I want to see a little bit more from the market. I want to see another rejection of this level in the form of a lower high. So the weekly chart, although it does look very inviting for a short here, and it is indeed a game changer plus bar. So game changer, key reversal bar followed by an inside bar. Okay, it's a crazy looking inside bar, but in the right context, that would immediately give me an entry underneath here. Stop loss seems pretty clear, or does it? Do we get it above here or do we get it above here? That's the area that's concerning me. And I want to see this rejected, these highs backed up by a lower high before I get short. I may miss this, and if that's the case, it won't be the first time I've missed a trade, right? My problem's not FOMO, it's FOLO, and I'll go into that a little bit later if we've got some time. So it's a no yet from me. It's a let's wait and see. And look, I'm riddled with these this week, absolutely riddled with them. They look great, but I want to see confirmation of the reversals. That's EuroCAD. CAD Swiss is really still my favourite. And I think I've been trolling this or trying to get into this for quite some time, but it refuses to give me what I need. Maybe it did last week with that big rejection bar. If I have a look at this in context, that's the bigger picture. Look at how many times this has been historically a failure in terms of lower prices. And here we are again. Massive range, absolutely massive range. And do I need to wait until we get back inside that range and retest that level? Maybe I do, because it just won't sit there properly for me. 2 weeks ago, or maybe 3 weeks ago, we saw this bar here. And I said at the time, all I want to see now is a higher low. Is that what I've got on a weekly chart is the question that I ask myself. And the answer is no. And really, to see a higher low, I first need to see a rally and retracement. Okay, we've probably seen it in one bar, a rally and a retracement, but I'm not convinced yet that this is the place to go. So like I've just described on EuroCAD, I still want to see a higher low in here. And again, I may miss this entry. But if I miss this entry, I don't think it's that bad, because we've got a long way to go here, even to get to the top of the range. And if this were to reverse, we could be talking big numbers up here. So I'm not really concerned if I miss this. I don't think it's going to go bam or zoom straight to here. So I think there's plenty of time if I do miss it. If I don't, then I'm going to get the right entry, or the entry that I want, not the entry that the market's prepared to give me at this point. So that's where I'm headed with that. Does look good on the daily, but if you have a look at the daily, you can also see a horizontal level and a confluence area with that trend line. Break and retest maybe gets me interested. Have I got the higher low? Again, question mark. But I've got to see something of clear space ahead of me before I take the position. So it's just not there yet. This pullback bar today could get me interested tomorrow. So if it, say, finishes up about halfway down that candle or a bit less, maybe I'll be interested tomorrow. But it's a patience game for me, and very much I'm stalking this like a lion on a gazelle. But is that a gazelle? Is that a thing?
A gazelle's a thing?
That's a thing, yeah. Speaking of gazelles, they're South African.
Brilliant link, mate.
And very shortly we'll be going to George, just as a little bit of a segue, who's joining us for the first time in 2023. Look, I think I'll leave it there. There are quite a few of these that I'm seeing as potential turnarounds, but I need to see confirmations at the moment. I'm looking for those higher lows or lower highs coming the opposite direction. Of course, Friday threw a bit of a spanner in the works in terms of big moves, if we're talking anything against the dollar, and that tends to lead to either A, consolidation, or B, uncertainty. And that's exactly where I am with the dollar pairs. That said, I always look at the euro versus the dollar, and always I see an untested daily pivot, I get interested. So I'll keep you posted on this one. If I do get a potential for this to go long, target is most clearly the daily pivot, but I don't see anything that I can trade at the moment from what I'm... Actually, there's a potential there, and it's going to look like this. I need to see this candle close underneath the trade line. Then I need to see probably one more, then get above it and retest it. That'll give me a clear false break and a target of daily pivot. So that's kind of where I'm at. There are quite a few, as I said, on my... just have a look at these. Euro Kiwi, because it's in a range. I've given you Aussie Yen, CAD Swiss. They're the three main ones. We'll see how that goes. Any more, Ash, before we introduce our wonderful fresh... Look, he looks as fresh as the daisy. He's had a beard trim. He's shaved.
I've got lots to talk about, mate. But let's bring George in, because I think he's probably pushed for time. So let's always try and get to George by 1:15 the hour, and then we can discuss the fundamentals later. There's no trades right now, but there is some little bits of data that we should probably look at to kind of make our decisions this week. And it's quiet this morning so far. So let's see what George has got to say now. How his year started? How are you getting on, George?
Happy New Year, buddy.
Yeah, it's fine. It's going well. Quite, just moved into a new place, so that kind of took me up for a couple of weeks, but all fantastic, brilliant, absolutely brilliant.
Oh, amazing,
Yeah.
mate. It's good to hear. Good to hear.
I
that
thought
things are
you
going well.
might have bought a place in Bali and were moving there. You seem to be there for a while, mate.
No, we were, and we actually enjoyed it. I mean, I keep saying this, from leaving leaving the door here, getting out of the house and getting into the hotel is 27 hours. You might as well make use of it. It's not a place you just pop in for the weekend.
Yeah, that's too much for me, I've got to say.
Yeah.
3 hours is too much. But 27, my goodness gracious.
Yeah, that's yeah.
It's crazy.
A long stretch.
And sitting in airports, and it's just crazy.
Yeah.
But it was worthwhile. And in spite of everything you hear about Johannesburg, it really was great to be back home. It was absolutely fantastic.
I hear good things about Johannesburg, mate.
Yeah, there's plenty of good things. There's deer, there's buck, there's gazelle.
There's gazelles. Fantastic. I knew it was a thing. It's just this old brain of mine questions it. It comes out as a word, and I think, is that a thing?
You probably get more head nods and responses if you say buck here. Plenty of buck around.
Okay.
The guys will understand you. And then, of course, we have these very interesting challenges with the electricity grid here. I mean, it's really proven to be quite interesting. On average, we got no power, probably about 10 hours a day.
Wow.
And sometimes it's more. They just can't cope. The grid is old, the cold things are breaking down. We don't have, so all sorts of things. So we've got, maybe you may hear sound buzzing in the background. We've got inverters, generators. We're making it work,
Wait, there's plenty of sunshine in Joburg, isn't there? Solar panels.
Solar panels work beautifully. And they've got a beautiful, some enterprising guys set up a beautiful alert system. So if you subscribe to that, if you got that app on your phone, you're not taken by surprise, so you can plan your life. So we are getting through it. Having said that, it's been, I think you kind of touched on it a little bit. I'm going to just share my screen. I logged on with 2 laptops because can I get powers on this one?
Can we get George
sorry, mate. I keep forgetting I'm the what am I called? The producer. Yep. Which one would you like power on? I'll give you power on everything. There we go. There's one.
Yeah, give me on both, then I can.
You got it, buddy.
Let me start with this one. So the only reason I'm on 2 laptops is that I got two different accounts I'm trading, and I'm trading different markets in them. So this one's got 3 markets, the other one's got 3. It's got German 30, S&P 500, and pound Aussie as the currency. So, this start to the UK 100. What do? You just got to sit, right? Because we're in that bear channel, and that first candle hasn't really given us decisive move, besides confirming that the market has been selling off since the morning. So I need to wait for us to get out of the range of that first candle. The same old story, the magnetic field of the first candle. I think if we get out of that to its extremes, down here might get a wedge bottom, double bottom, and allow me to trade if we get acceleration off in the higher low. Alternatively, if we get to the top, this level here, which on my charts was the all-time high. The bulls want to get above that, of course, and the bears want to defend it. But the measured move of that first candle will take us just above the open. And who knows, if the bulls are not strong, then we will get a reversal pattern here. of sorts, double top, then I'll look for a lower high. But where we are now, there's nowhere where I can put my stop. There's nowhere where I can jump in and trade. So I'm gonna wait and see. Hey, you see my screen has got bright electricity is back. So I'm gonna wait a little bit and see what we get as the day unfolds. But if you go up, that's gonna mess up my daily. Let me just do this quickly. I just want to view those fibos on the 5, then go up to the daily so we can see. I think the price action there is probably indicative of what you might get for the rest of the week. So on the daily, I mean, there's a whole cluster of magnets up here that should pull the market up. I mean, we had this trading range in December, and we broke above that in January. So the measured move of that is just a little bit ahead. We had the very strong move beginning of January. If you consider that as a first leg of a possible second leg, again, the second leg of that is still up here. So while on the 5 minutes started off selling off, the overall structure, the market is bullish. We just have, I mean, we're at this level here, the all-time high. I mean, that's when I look at my charts, it's that level right up there. And it's the first time on this chart.
That's never been above level. Is that right?
Say that again. I didn't hear
that. You said that's the all-time, never been above that level.
Yes.
Wow.
Yeah.
Okay.
Yeah.
That's interesting.
So I mean, this is a monthly now, so that's the level. And of course, for the bears, a double top here will be fantastic. Last time we got to create that level, we just sold off, and then that they maintained that level. And when we got to this level here, early last year, you can see we tried to get above it. So they've been defending that. It's quite commendable for the bulls that they put a huge bull candle above this. That's
extraordinary, I believe. Yeah. In this climate, that's extraordinary.
It definitely is. Now we're gonna look at the price action and kind of ignore what our logic tells us. If the bulls are strong, they want to get up here. I mean, on the UK 100, they want to get up to the 8,700 level. I mean, it seems impossible, but the price action is saying if they follow through this strong candle for January and just smash above here and get through all of these other levels, which are just measured moves on the daily, they can get there. So I'm very
You and I have
keen.
been around long enough, George, to understand there's no such thing as can't happen. No such thing.
Yeah, exactly. Exactly. So today is interesting. I mean, while I'm waiting to see what happens, if we do get that double bottom now, I'll get back to it again. If it forms at the measured move of that first candle, then the bulls are setting up to try and get above the high of yesterday. Then all of these other levels, leg 1, leg 2 of that, if that's a full leg 1, that's a pullback, that's going to pull the market up. So what I'm looking at, my bias, if you like, for today, if to see how we're going to get to the measured move of that first candle. Right? So already we've got a potential wedge. You might go up again, come down. If we get a wedge bottom here and I see acceleration of it, then I'll be very keen to look for a higher low and see if the bulls are strong enough to go all that way. So far, I'm looking for a reversal setup to get to go long. That's kind of what I'm looking at so far on UK 100. Hang Seng 50, I mean, that gap down was quite interesting, just this morning. But, it followed through from the selling that took place Friday. When you see a Friday like that, you always say, I wish I worked on a Friday. But,
Yeah,
Don't
tell me about it. I've got some sad stories about Friday.
Yeah. So at least you can say, oh, okay, good selling. I mean, last week was a whole slew of news. I'm sure you probably touched on that extensively in your shows. And that's kind of what created all of that. And, we've got to wait and see if the bears are going to be strong enough to hold it. That gap is a problem. And if you look at these strong bull candles, beginning of the year, bull channel, we've kind of broken beneath the bull channel. But that's what the bulls have got to defend. Okay, that first pullback, that level there. And that's kind of where we're at. I don't like to clutter my charts, but if you had that in there, where we're that 3-day, 4-day bull rally, if you like, we've broken beneath it. That's where the gap down is. But that today could end up just as a reversal candle. So again, when I get down to my trading time frame, I had a look at it, when it opened. It was quite one of those where you just, if you had a scalper's mentality, you'd have been in and out, but I don't scalp, I think as guys know. So, nothing really set up for me to jump into here. And that doji raises a lot of flags for the bears. I mean, they're strong enough after those 2 days to gap down. Why give us a doji at the open? At least a bear candle of any sort of strength. That's what you're going to follow through. So where we are now, I'm just keen to see, these are higher lows now. So there's a wedge bottom. The market is creating higher lows. Still not keen to jump in. We are below the low of yesterday. But I think today has the potential to get above the low of yesterday. That story that I mentioned on the daily. So where would I jump into the market? If we come down from here, but weekly, with tails and I can see the bulls buying in, and we get here and get some kind of a reversal pattern. After the wedge, higher low double bottom, I'll be very keen to take a trade in here. Stop, of course, will have to be below the low of yesterday, and the low of the day. And just see if the bulls are able to accelerate up. That's kind of what I'd look at. I mean, you got to wait. The market here is closing in a couple of minutes' time, and then there's 45-minute break. So we'll see whether we come back with any force after that. Euro is interesting. 2 candles on the daily. 2 bear candles on the daily. Now, if you look at it, and I like the fact that the bears are strong, but I always say if I was trading the daily time frame, would I sell here? I wouldn't. I would be saying to myself, okay, wedge top, that's good. It's good for the bears. Good acceleration beneath, from the wedge top. I would then like to see a lower high if I was trading on the daily. I'd love to see a lower high. If I get a lower high, then that pattern is held, and I'm trading off that pattern with a lower high. Now, with that in mind, when I go down to my trading time frame, I don't know if that lower high is going to start forming from today, or if the bears have a little bit more momentum to go a little bit lower before a lower high comes. So I'm going to look when I get down here to the 5-minute. I look at it and I say, but hang on a second. The bears were so strong, those 2 with that follow-through candles, or 2 bear candles. Why are we doing this? We should have at least come down quite strongly already, and maybe create whatever pattern down there. So perhaps there is a probability that that lower high that we set up on the daily might start to form a little bit earlier, which means on today, if the bulls start to give us a reversal pattern here and start to get above the low of yesterday, then I'll be quite keen to start to buy, because that might end up as a couple of bull candles, which will create a lower high for us this week, next week on the daily. So the fact that we've opened the day going sideways on the euro does not convince me that the bears have got the strength to follow through yet. So that pullback that will create the lower high might be imminent. So in spite of this fact that we're not going very far here, I'm going to be looking, if we get above the low of yesterday, and look for longs on the 5-minute. But of course, I'm not hoping the market is going to just keep going up forever. I know that there's a potential, if the bears are strong, to create a lower high, unless the bull surprises. That level, I've got that marked. That's just the, call it a bull channel that created the wedge. So we are in that zone, if you saw that on the 5-minute. So that could be a level of support that the bulls might want to come down to before we start to go up. So waiting to have a look and see what comes up there. Let me see now. I hope I'm smart enough to just share the other screen.
Interesting, looking at euro dollar. I was going to mention it earlier, but I was going to save it for later. But both Thursday and Friday were news-driven events. Yeah, the ECB on Thursday and the NFP on Friday. So I think there's a little bit of room for retracement there myself to produce that lower high. Yeah.
Okay, so you've seen that as well, that potentially we might just retrace a bit and create a lower high. Yeah. So that's kind of how I think through, and I'm looking at the daily. How would I be trading it? Where would I be jumping in? Just to give me that little bit more information when I'm down on the 5-minute to try and take advantage of those moves. So if they don't get to that level, that's fine. If we get a wedge here, we get up, high, low, double bottoms, whatever. There's quite a few other patterns that might encourage me to jump in long. But if we get above that, then I'm more and more convinced that there'll be a lot more buying opportunities today in this market. All right, let's see. So now you might see a bit of my face now. That's going to be interesting. One side.
Gorgeous George.
All right. So what I got here, German 30. So I'm just going to stick to the daily on this because I don't have anything set up yet on the 5-minute. But again, that breakout by the bulls above this trading range. This was a December trading range, and early January broke above it. The measured move of it is up here. So I think there's still a little bit more room for the bulls to go as far as January 30 is concerned. So again, I'm looking at the low of Friday, and I'm going to look for reversal patterns down there to see, if the bulls have got momentum just to accelerate up a bit further. From what I'm looking at on the structure here, I really think they have that opportunity. So that's on German 30. Pound Aussie. So again, selling off, lower high, we sold off. Just concerned that, the bears, after creating that beautiful lower high, a couple of days followed through, ended up just going sideways. So breaking beneath this level has been quite tricky for the bears right here. So I think, or what I'm looking for is to see if we come back and test these levels. What is presently the low of January. The fact that we've gone sideways, there's no decisive breakout by bears. We in a trading range area. And I don't put a lot of lines on the chart, but if you were to try and mark that low and then try and mark that low, this, let's use a rectangle. So this whole zone here for me is that's trading range area as far as this pair is concerned, this currency pair. So if you're in a trading range, I mean, what are the range traders doing? You know, they're gonna be selling anytime it gets up to the top, they sell back. To get to the bottom, they buy. So I've got to wait to see if there's just a little bit more to get to the upper levels of this yellow rectangle. And if we get there, then I'm going to look to short back into the range. Or if we get a reversal pattern, you know, forming strong enough on the 5 minute already off the 10 EMA, yeah, then I'll take it. But I'm not expected to go all the way down here. I think the low of January is going to hold for a bit until we get decisive breakout of this area. So kind of waiting a bit on that. S&P 500. In spite of that bear candle that we had, I'm looking for longs here in this market. And why am I thinking that way? If you just look to the left, I mean, I had a bear candle here, got back to the 10 EMA. A day ended up as a bull candle. Same thing here. Bear sold off, ended up as a bull candle. So as jagged as it looks, I mean, it is a bull channel. Yes, we've kind of tried to break out above the measured move of this little pullback here. But all the way through here, we've been going up, and I could put a kind of broad channel. So with that broad channel, if the bulls are strong enough, of course they're going to keep going up. And that's what I'm looking for today, to see, even if we get back and test this breakout point, which was the high of January. We come back, we test that. I'm looking to see if we're going to get a reversal of that and the bulls continue to go up, or we might get to the EMA, which is kind of contained price for a bit, and bounce off that. So I'm going to wait a bit. I mean, with S&P 500, I've got to wait right up to the open of the New York Stock Exchange to see if we get the momentum coming in. So my early thoughts on S&P is some kind of continuation by the bulls. I'm saying continuation by the bulls because I'm thinking bull breakout, pull back, and that's continuation. So that bear candle and that tail on top is really, so far, looks like just a pause in the acceleration up by the bulls. Let's probably like that, more like that, yeah. Just to anchor it right here. Okay. But S&P 500, I really only like to look at it as we get closer to the open of the New York Stock Exchange, because much changes just when that market opens. Just German 30 for the guys just before we go, 5 minutes. Okay, so when I say I'm looking to go long on this, we kind of starting to create something of interest, but I want the market to come back and test here. That's my preference. Let's test down here. Give me a higher low. If we don't get the test, we get acceleration, then I gotta wait for the higher low double bottom. But I'm pretty bullish on the markets today. So that's kind of where I am, gents.
Good stuff, mate. Yeah, it's interesting, isn't it? I mean, I think I opened up the charts this morning. I thought, this looks a little bit. The fact that it's relatively calm, I'm actually quite surprised about. I'm surprised anyway that we've had not so much the FTSE. FTSE's moves make sense to me. The FTSE's been in a bit of a trap for years. When other indexes were making all-time highs, the FTSE was just kind of going between these two ranges. So for the FTSE to actually eventually break out and start to push into probably more valuable levels makes sense, because the pound has become so inexpensive in comparison to the other currencies since Brexit. And obviously we've got this energy situation, and China opening up as well, and the way the FTSE 100 stocks are made up suggests that we should really be getting a half decent rally in the FTSE. But when it comes down to the Nasdaq and the S&P, I'm kind of surprised they've managed to even attempt to hold on, because we've had Amazon, Google, and who was it the other day? Amazon, Google, and Apple, all really kind of like giving some pretty dire earnings. I don't think Amazon has had earnings, or Apple have had earnings quite the way they reported for years, if ever. You know, for the last quarter of the in fact, if in the last quarter of a year, for Apple to kind of report the way they did is highly irregular. We've got this jobs report. You know, we all sort of like said about the jobs report that came out on Friday, suggesting that Jerome Powell isn't head faking. You know, this is why the market has decided to go up. It's like, whatever you're saying, central bank, we just don't believe you, so we're just going to buy the market anyway. The jobs report suggests that it probably isn't a head fake, and the fact that the S&P and the Nasdaq has managed to kind of push way beyond where it was on nothing, create a very kind of a little bit of a suspect kind of reversal pattern. It's there, but it's not really strong, and not just come straight back and test where it came from. I'm a bit surprised. I think, even though I think that the market is probably primed to go higher, because when it wants to go higher, it'll go higher. And I think even though the market is primed to go higher, I think a test of those levels where it came from is it's likely, just because there's nothing fundamental which should drive it higher. You know, yes, the sentiment seems to be sort of quite keen and quite bullish, but there's nothing fundamental. And as I say, the FTSE is a completely different beast. But you know, the S&P and the Nasdaq, I'm surprised that it's holding on, if I'm honest. So I think a pullback is probably likely, even though there might well be a bit of a rally before the pullback happens. We got Jerome Powell, I think, on Wednesday, and he's trying to calm the market down. And if he's a driver, if he becomes a driver on Wednesday, then he's likely to say something relatively hawkish. And you think that, you know, by Wednesday we could see the market start to drift down. We do have a seasonal short in the market around about the 14th of February. So you know, it could fluctuate around these particular levels. And if it does, and the market rhetoric hasn't changed, then I think we're probably going to ease back. But I'm surprised, mate. I have to say as well, if it does, you know, and I said to Jeff on Thursday, if this market pops up, I'll be selling it, which I did. But I closed the positions after I saw, you know, how weak the move to the downside was after those jobs numbers. So I'm waiting for another rally, really. I wouldn't mind it getting up to that second blue line above where your price is before I look for further shorts. Particularly if things haven't changed. Yeah, the one above that one, actually. So yeah, that I wouldn't mind sort of like trying to sell it off there again.
My question is, where's the investment money coming from? Sorry, I've been talking for about half an hour, interjecting, George, and I didn't realise I was muted.
Yeah.
Some would say that's a blessing. That's not your problem, mate. My question is, where's the cash coming from to invest at the moment? Because you've got inflation at, well, pick it 10%, depends on the country, right? But it's going nuts. You've got interest rates going nuts. So that's not, to my mind, a speculative environment. And if we're talking NASDAQ in particular, I think you've got to pick your intra-sector, if you like, inside the NASDAQ, because if you're talking about tech, tech's not going away anytime soon. But, you know, you've got to pick your poison. But things like disposable income, reliant companies, perhaps like you know, your Netflix, which have, you know, had a big crash earlier on. I don't know how much that has resurrected itself or jumped off the floor. But companies that rely on disposable income, I think, are extremely vulnerable at the moment. And if interest rates continue to rise and inflation doesn't, you know, come down, then I don't see how those vulnerable sectors, I'll put it that way, can actually rise.
Well,
in fact, I don't see which actually can. What can sustain a bull run at the moment? I don't get that.
Well, I think what's the way it seems to me is that we've come down, 30% on the Nasdaq, which makes it, if you were to say, that this particular area is down 30%, and you were interested a year ago, it makes it good value. And then if you sort of like say, well, the reason it came down 30% is because inflation was raging and the central bank were raising interest rates. And then you kind of say, well, okay, well, inflation actually is coming down. It's coming down pretty substantially. It's made some decent steps back towards 2%. It's not anywhere near 2%, but it's also not anywhere near the all-time high. And then you say, well,
how many numbers have we had though? One?
No, quite a few. There's the inflation picture is kind of built through many of the numbers. We are sort of seeing inflationary pressure come off. Yes, CPI prints, they're a little bit thin on the ground maybe, but there are others. There's PCE, there's PPI, there's house price indexes. There's the cost of energy as well. We've seen the price of oil coming down. So lots of, and also China's opening up. So the supply issue of inflation is perceived to be dissipating. So there's lots of things that are suggesting that actually inflationary pressures are lifting. Then when you sort of think, well, the central banks have been putting up interest rates to fight inflation, and you perceive that inflationary pressures are lifting, the next thing that you would assume is that the central banks will pause and then pivot and start to bring liquidity back into the market. And if you think that's going to be happening in the next 6 months, you want to pick the products at a price which is 30% lower than it was.
Yeah, good point.
When things were really good. So I think what we've seen is a move, really an anticipatory move of, we are going to see the central banks start to lower interest rates again. So let's get in. But the central banks keep saying, and this is where the market is not in agreement with Jerome Powell, and just doesn't believe him. Whatever the central banks are saying, they're just saying, no, that's just not going to happen. But then the jobs data keeps coming out, and the jobs data, with jobs that are being created and unemployment which is not falling, that is inflationary. So that's where the balance is starting to be put out of whack. But what we are hearing also is that there are sort of big companies that are laying people off. So is it that jobs data hasn't yet filtered into the actual data points of the nation? And in about 6 months' time, we do see that jobs data start to show a lot more weakness. And it's another reason that you'd invest now, because you're sort of like, you're hearing about it on a micro level with the likes of Apple and Google, and you're waiting for the macro level to kind of come into it. With the nation sort of saying about unemployment. And if you are early, that means that when that jobs data weakens, the market's going to take off, and you want to be able to get in at this price. So I suppose the reasoning makes sense, but where it doesn't start to line up is that they have not yet had that jobs data which enables them to be justified. And yet the market still continues to push higher. Now, is it that they're just wrong, and at some point they will have to reverse? And we saw it last year with the central banks. Every time the central bank raised interest rates, the market rallied because it was saying it won't go any further. But it has gone further. So it's possible that people are early, but it's and it's about to change. But it's possible that they're completely wrong. And inflation, yes, it's dipped down sufficiently, or substantially, I should say, but it's not sufficient to where it should get to. And we might now plateau, and then the central banks have to react again. Because I can't imagine inflation goes to 10% and back down to 2% in the course of 12 months.
Not going to happen. No.
So I think that there are sort of like other potential headwinds that are created that suggest that inflation could remain in an area where it just consolidates, while we sort of like figure out the next leg. So, people are buying here because they think they got value, but it's possible that actually that they could be a bit early. We need to see one more dip, which is the way I'm looking at it.
Picking bottoms and tops. good luck with that. It's fraught with that.
Yeah.
George, if you've got to go. But I need to ask you a question. And it came up, and you and I look at reversals in particular in a very similar way. And it came to me that the next Bali, are you musical at all, George?
If you think of frogs croaking as musical, yes.
Paul McCartney did.
We can give you we'll give you a tambourine then. Ash, if you bring along your keyboard, or there's probably one in Bali anyway, but thinking the next trading retreat, we could have the TB trio, Trading Buddies trio. We could probably pull in Paul Hutton as a musical backup, but our first song has to be higher lows and lower highs, and it'll go something like higher lows, lower highs. You get the beat, right?
You know we're going to get a band now, don't you?
Oh yeah, sounded too much like that, right? Okay. But there's something to work on, right?
Yeah, sounds good. But you're going to bring a didge, are you? A didge made
of bamboo. I could do that. Absolutely.
Yeah.
I can definitely do the tambourines there, or fake a drum beat or something. I'm sure I can.
Oh, we'll crack a coconut or something over there. I'm sure something will work. All right, mate. Thank you so much. Great to see you back.
We'll see you next week for sure.
Thank you, buddy. Amazing.
And you
work
on the tambourine rhythm, right? Okay.
Cheers. Bye-bye.
Cheers, George.
See you, mate. Where are we up to, Ash? I better have a look at what's going on so far with gold and the euro, I suppose.
Yeah, well, that's what I was going to discuss a bit of that as well. And CFTC did not release the COT data this week. They might have done it by now, but when I checked yesterday, they had problems with collating the data, so we're a little bit blindsided by that. I'll just check if they've released it now. Okay.
Well, as I said, we've been triggered along gold. Hate the trading straight into a daily pivot. There you go.
Tough one, huh?
Euro. Have we got a set up on the euro? Not yet, but looking a little bit promising. That's actually might be interesting on the 15-minute chart. And no, I don't normally trade the 15-minute chart, but it's good to have a look at it. No, it's a mess. So we'll have to rely on the 30. I'd like to see a close underneath that trade line at the moment. Now, David has just taken a short on pound, dollar, and euro dollar. That's interesting. Let me have a look at that. What time frame, David? Ooh. My first thought process is that's an extremely oversold currency pair. That's my first thought process. Looking at that.
Yeah, that's the issue, isn't it? And I have to say I'm inclined to agree with David's overall direction, but the currency pair is oversold, and you might have to hold on to this one for a while. Might be sitting on that one for a while. Serene says that we can remember charts better with the songs, so you're gonna have to write a few more, Jeff.
As if I'm not busy enough. No problem.
Yeah, that does look a bit oversold. And look at that. If you draw a horizontal level along that, Jeff.
Where would you like it here?
It's tricky, isn't it, actually? Yeah, that does look. I mean, there is one there, isn't there?
Yeah, it's soft, though, I think.
It just looks like a potential. I don't think it's there. I've just drawn a trend line actually from the 10th, so from October the 12th, and extrapolated up. No, one back, mate. One back.
One back. There.
There?
There.
That one. Yeah. And then you can tidy that one up so it comes down a bit. That's the problem I've got with it.
Yeah. Again, agree. Directional bias, no problem. Entry at that level is problematic for me. If you've got a method, I don't have a problem at all, because where's your stop loss? And that's the key. The key is if your stop loss is here or here, you can withstand a hell of a drawdown. And the direction still takes over. You've potentially got an M pattern there as well. All sorts of things going on there. But yeah, shorting at that level's not something that I would prefer to. Come on, get down there for David. Go, David, go. Love to see you get some money here, mate, frankly. Euro, is it different? Exactly the same, really. It's just oversold. Now, as I said when George was talking, ECB, NFP. So both emotive reactions to news events. So I would not expect price to continue without some sort of retracement. That's the way I see it anyway.
Yeah.
Yeah, really tough to trade at the bottom of one of those big candles. Really tough. But again, if you've got your stop up here and you're taking a position, then okay, I get it. But on a small time frame, I think it's fraught with danger. Sorry, mate. Did you?
Oh, sorry, but you broke up there. What was that?
Hasn't been released.
Oh, sorry, say that again.
Oh, okay. I've got a problem, have I? With my internet.
You're okay now. You're okay now.
Okay, so I was asking you, have you found that data, or is it still not being released?
It's not released, mate. No, there's been a problem with a third-party reporter for the CFTC, so it's probably not going to be out today. Which, to say, blindsides us a little bit because things can move around, and they would have moved around as well from last week. So there is no COT data this week. And it is interesting when you think about what's happened. I mean, there was a suggestion, and I put it in the Telegram channel last week, and we talked about it on the market analysis as well. There was a suggestion that the dollar was the currency to be looking long, and also let's talk about that first. So with the dollar, sort of the suggestion that the dollar would be the one to go long. It did need that driver, and that driver has come in the face of the jobs report. We've seen silver short, we've seen gold short, we've seen the currencies against the dollar short. Where it's quite interesting and where the dollar's still exciting is that the dollar's really, in the same way the Nasdaq is, I suppose, the dollar's undervalued in comparison to some of these currencies. If they are about to pause, if the currencies are also about to pause. Pound has got, where I quite like, and my currency pair this week was actually pound dollar short as well. So I like the pound dollar short as an idea. But my problem is price at this stage. I'd like to see it back to really where that pivot is before I went short on it, the green pivot line there, mate. Is that the monthly?
Yep.
Yeah, I'd like to see it really in around that area, maybe shade below that, but I'd like to see it come back there because the dollar is interesting. We got GDP numbers from the UK this week, and we were weak last quarter. It was negative last quarter. So this would be the definition, the technical definition of a recession if this quarter also comes in under zero. And I think there's a pretty good chance that happens. The UK is in a bit of trouble. We're seeing global weakness, but it's not out and out scary weakness that we're seeing in the globe right now, and that does again put pressure on the market because central banks, they don't really have a reason to pivot, and they don't really have a reason to pause yet, because the inflation is still running. And the global economy is in relatively good shape. So I think that there is probably some further to go for the dollar, and I think that against the pound it's pretty good. I think it's good against the euro as well. The Swissy I looked deeper into the Swissy. Economically, it's probably the outperformer. The fact that the S&B don't really like to raise interest rates, and because they are performing so well, they probably won't want to raise interest rates, makes it a tricky one to trade off economic data, because the economic data kind of like, coming out positively for something like the Swissy is almost more likely to keep it weak, because that's what the S&B really want for trade. So the Swissy looks good. Aussie's looking a little bit shaky, I've got to say, mate. Retail sales came out month on month today, and they came in at negative 3.9%. So doesn't look like the Australian economy's in the best scenario and situation.
RBA tomorrow as well.
RBA tomorrow as well. That is the headline one. Yeah. So RBA tomorrow. I think the Kiwis in a little bit of trouble as well. We've seen global dairy prices start to recede, and their trade balances are reliant on those numbers. So we're seeing that start to come down a little bit. So there's lots of things that I think are quite interesting. But I have to be honest, I opened up the charts this morning, I thought I've got a complete lack of clarity. Maybe it's because the COT data is missing, but I've got a real lack of clarity. And I think it's going to be one of those that as the week progresses, things do become clearer. As things stand right now, I'm short on American indexes. That's my thinking is short American indexes. But they haven't really had a decent sort of amount of pressure and follow through at this stage, and that's I'm finding that relatively surprising. So I'm almost waiting for a rally to get a better price for the short, because a drip down is kind of no good to me. I'd like to see a push up and then move into the short side.
It's exactly the same theme as George and myself, waiting for those lower highs.
Exactly, mate. Yeah, exactly.
There's a song in that, mate. Told you.
Yeah, yeah. I think there might be. But yeah, I think it's a difficult one. I think it's a tricky market today, and subsequently, I'm not really that interested in it. What David was saying about the pound, I would concur with his directional bias, but I don't like the price, and that puts me off the market. I'm not saying he's wrong. I'm just saying that it doesn't appeal to me. Where price currently sits. So I'm stepping back and saying, let's give it a little bit of time to ferment, I guess, and mature, and then we'll see if we can get some trades on in the middle of the week. And it would be to look for pound dollar short, and it would be for euro dollar short, and it would be for dollar Swissy long, even though the Swissy, as I say, is the one tricky one. But it would be for the Nasdaq short, and it would be for gold and silver short. So I'm basically saying dollar this week would be would be the one of interest. That's the idea. But I'm also saying that the price is just not attractive to me at all where we are.
Yeah, that's the dollar index we're looking at now.
Yeah.
And look, these explosive moves are fantastic if you're on board. If you're not on board, it becomes problematic, because you've got to then make an assessment and say, well, okay, do I buy this here? And the answer for me 110% of the time is always going to be no, I have to wait. And that means I'm going to miss some moves. There's no question about that. Because if momentum means anything here, then this goes to this level, or at least this level, if momentum means anything. But over the years of trading, I've found that, these things happen so rarely, it's far better to wait for the retracement.
Yeah.
Whether that suits your own personality, or, your own psyche, or your own risk profile. I can't answer that question. I really can't, because, if you jump in here and it goes to here, you were right and I was wrong. At the end of the day, my experience tells me that this happens far less than this, and that's why I'd be waiting right now for that to pull back to a support level. It's not that hard for me, because I've seen this 100 times, 1,000 times, 10,000 times. So I don't have to make a decision here. The decision's made for me. I don't have to even think about it. I just go, okay, too hard, wait for the pullback.
Yeah.
Everyone's different.
Yeah. Yeah, I'm with you, mate.
Different. David, sorry, mate, we've run out of time, and I see your questions, and I appreciate your input as always. But we just haven't got time to go deep into your methodology at the moment. If you could come in a little bit earlier, that'd be fantastic, and I'd love to tackle your methodology. That would be great.
Oh yeah, cool. So just took a short. I'm just also having a look at David's question just to see what we got. So try to use top-down analysis. Previous days high and low and close. 1 hour support and resistance levels that I was given 5 minutes. You see my 1 hour chart levels are most. I end up jumping the gun. Okay. Oh. I tell you what, it'd be great, David. If if you're, is there any way we can get David actually into the room? It'd be great to sort of see what you're actually doing there and sharing what you got, mate. We could.
The only way to do, I don't know how that could work, because don't you have to be an ATW person to get into the room? No, you don't.
May well be. You may well be. I'm not sure, but I see my 1 hour chart. Okay, well, let's see if we can. If you're around on Thursday, David, or next Monday, and you come in nice and early, then we can really approach this stuff, because it's really cool to have a look at what other people are doing.
You bet.
There might be something to learn from that. So yeah, thanks for the input, though, mate.
Yeah. Sorry, I do have to go. I've got another meeting pending.
Yeah,
so,
no problem. No problem.
I'll have to rock and roll. Just repeating my thought process. I think CAD Swiss is a buy tomorrow if this candle closes pretty much as is, and maybe even on that line around about the 68.80 mark. I will be placing a buy order there. I'll be taking profit before those highs. Aussie yen, I've spoken about that. I'm looking to buy that and get some profit in the bank before these highs. Euro dollar, I think, is a distinct possibility today to trade long. Love where that's closed. That's beautiful. Exactly what I was looking for. Now I need a candle to break, maybe even take out the highs here. That would be cool. Then pull back. If it does that, so it takes out the highs, doesn't have to take out the highs, but it's better if it does. Take out the highs, pull back to here. You can either enter above the trade line or above the candle, and there's your target daily pivot. So that's entirely on the cards. Hate the fact that we're in gold at the daily pivot, but we are. There's nothing to do there because we're just testing a system, right? Hopefully you've cancelled your shorts like I haven't, but I will do that as soon as I get off there. Got to go.
Thanks, buddy. Nice one. All right. As always, thank you very much for being my trading buddy, and everybody in the room for being our trading buddies and being on board. Thank you to you, David, as well, mate. Hopefully you can get in on Monday or Thursday. We'll be back at 8 a.m. UK. In fact, 5 to 8 UK, isn't it? Yeah, 5 to 8 UK. Yep. And we'll see if we can get some of those bits and pieces that you're talking about. Have a great week, guys. Have a great week, buddy. I'll see you Thursday.
You too, mate. You bet you will. And 5 to 8, don't be